Let's ask a question. What exactly has driven retail investors away from East Africa's biggest securities market? You see, between the third and the fourth quarters of 2023, the volume of shares traded at the NSE fell by over 25%. There was way more activity on the fixed income assets. In aggregate, in fact, the last 9 years have been brutal for just about anyone holding equities at this bourse. Between the 3rd of March 2015 and February 29th, the NSE 20 was down by 71%. The wider NSE All-Share Index was down by 46% over the same period. It's that thin blue line on the chart you're looking at there. And as you can infer from the volume tracker at the bottom, things as far as trading is concerned, trading has slowed down a fair bit over that period. Even the largest listed company here, Safaricom, that's down 16% over this period. So we go back to our original question, what is keeping retail investors away from the market? When I put that question to the outgoing CEO of the bourse, he cited 3 competitors: sport betting, cryptocurrencies, and way easier access to foreign capital markets.
That's been a very key concern. One of our objectives has been to have international local participation to be even, 50-50. And we are almost there. I think now we're at about 65-55, still skewed to foreign. But of these 45, huge proportion, you're right, is domestic institutional investors. The retail investor has not come back since the heights of Safaricom, Cooperative Bank, and the rest. And there's a reason to that. Now, in 2008, when investors put money in Safaricom, it was coming off a successful journey of IPOs from 2006. The Kenjan, Mumias, Everready, they're all being oversubscribed, and when they come to the secondary markets, prices would boom. Come 2008, that was the same expectation. But investors did not get the same results. I think within a couple of weeks, the share price started collapsing. And in addition to that, we had a refund crisis. People could not get their money back in time. So coupled up with, we've had a long season of no IPOs. Retail investors have been IPO investors, and unfortunately direct investors in the market. So again, they've been taking the market shocks. So that has been a very big impediment to bringing in that retail pool. Now, what have we done to change that thinking? Number one, we have seen the growth of aggregators, the collective investment schemes, the unit trusts. These aggregators have actually been able to change the psychology of retail investors. So now they're coming in through other vehicles. So you won't see them directly with me, but you will see them through CISs, which have increased in number, unit trusts, and that's where they're actually active in. So that's been one of the ways. Secondly, we have not had a market stimulating IPO. So the number of accounts of active players haven't come in directly because of a lack of IPO, because these people come IPO and then they speculate and exit. So that's been the third challenge. Number 3, we have had competing options. Unfortunately, sad to mention that sport betting really affected the market.
This is actually not something we would have discussed in 2015, because back then, I mean, it's a reality of the macro basket, right, that we're talking about. If you have X amount of money at a consumer level, they're going to spend it on certain things. And if you're going to spend it on, for lack of a better word, there's your liquor budget, there's your partying budget, there's your betting budget now, which is huge. And investing probably just doesn't show up there.
It doesn't show up. And that sucked a huge amount of our potential clients, because they're looking for the quick buck. And sport betting became so active. I mean, it's just tapered off. But do you remember the heights of Sport Pesa and all this?
I mean, at a point when if a company can make enough money to sponsor a Formula One team, that tells you the level of money that's floating around.
So that was a huge problem. I mean, one time the turnover on Sport Pesa alone was almost equivalent to the turnover of the market. And we were like, wow, we need to watch this thing. So those are the issues. So aggregators is one. Number 2, we have now come up with an industry app. So we've had all our players having one separate apps. We've centralized this into one. There's an industry app now. It's called Dosika. So I think that touch point is going to be very popular because it has got ability to open accounts. It's like the Dow CSD that you have with the central bank right now. Look at the surge in numbers. So that's the kind of thing we're looking at. And then the third thing is a lot of financial education.
Do you think you're also losing a bit of market share? I mean, it's probably small in the larger scheme of things, because if we are having this conversation in 2015, it would have been a lot harder for a retail investor then to be saying, okay, if I have a basket of, say, $1,000 I want to invest every month, most of it would probably end up in the NSE. Fast forward to today, you can park it with ETFs in the NASDAQ and the S&P 500, on the FTSE 100 and so on and so forth. And most of that is still happening online. Is that also taking away some of that capital?
It has, especially the youth. I mean, I can give an example. I have a nephew, and he has a small portfolio. So I told him, show me your portfolio, and I was extremely excited to see where it is. So he has Bitcoin as his first asset class, crypto, Ethereum. Then he had FX as his second asset class. NSE was his third. So I asked him why. Yet this is a safe bet assets. He said he likes momentum. So he likes things that move quickly, the global things. So you're right. I mean, the youth are very global. They want to invest in Tesla. They want to invest in Apple. They want to invest in all these Microsoft, So what do we need to do here? We need to start looking for such avenues. We currently have a proposition. An application that's mirroring that kind of those kind of products, and I think that's the kind of thing people are looking for.